Good morning. Today is October 14th, 2020. Stock I want to talk about today, Mdrr. Market cap 5.7 million, float 3.2 million. Straight squeeze today from 2 to 5, and now it's halted. As you can see, I practically broke even. I executed 2 trades. And it's sticking to the rules that I set in place to not go over 2 trades. I did break one of my rules. Initially, I was down, but I was correct about my thesis of the break, which is why I got back in it, because it just showed such strength. But this was originally, as you can see, it's the highest runner of the day, 341%. It's what I like to see, man. Float's been rotating ridiculously. Already 41 million shares, so it's rotated over 10 times already. And I honestly, I caught a great move. Just resumed from the halt. I caught a great move, man. But originally, so this is the pre-market breakout level, and I completely missed it because if you look at pre-market, if you look here, it tested the previous high, so it made a high and it stopped here and then it just curled down. So usually when it typically does that, it no longer is showing me strength. So I kind of just was looking through different scanners, and as I'm looking through different scanners, next thing I know, I noticed this thing's back over in the 3s. And so I was like, whoa. So, I flipped it back onto my scanner. So, I might be looking at something else. I might have been, I was watching this actually. And then I seen it pop up on my scanner. Whoa, up over 200%. And so it was already running right here and made a top here in the 367. So I wanted to buy the break there. So I try to buy the dip in this candle at 6:47 a.m. And then this thing continues to get squeezed, man. That's what I like to see, man. But so anyway, I try to buy the dip at 6:47 a.m. In this candle, and it executed me in the 560s, and then straight dropped, and I was down more than 5% very fast. So I had to cut it immediately. Again, that's why sometimes when these things move really fast, especially when they're getting squeezed like this, sometimes they don't have a pullback. So kind of right here, like right here, it broke through, never had a real pullback, and just kept going, okay? And now it continues to get squeezed. It's having a monster squeeze right now. But stick to the plan, man. And, I don't want to chase this thing now. I have the discipline to not chase it. So anyway, so the first, and in hindsight again, so this is the account that got blown up by PPSI that I'm in right now. So I'm trading basically with half position size. And I also have to remember and put it in the perspective that if I'm trading with half position size, because I always based off my percentages based off the $1,000 mark, which I'm noticing is kind of throwing me off a little bit. So I have to put the actual percentage of what I'm using. So if I'm using $500 compared to $1,000, then a 4% move is really a 2% move on a $1,000 position size. Okay, and so I took a huge loss right here, about a 5% loss, and then in all in one candle. And that's what I mean. Remember, I was talking about the volatility of these things in just one candle. They could go. And so I took a 5% loss right here instantly. And now that's the rule that I broke, because I have stated that if I'm down more than 2% in my first trade, then I would just call it quits. But the strength of this, it was just a matter of me just not executing this right. It wasn't that I was down 2% because I was wrong about what was going on. It's just I didn't wait for the dip. I should have waited and bought it in this candle on the reverse, and from it broke, because as you can see, it barely broke over and then just dropped instantly, which is just shaking people out. That's what it's doing. And then I could have bought in this candle and then had the nice move and So I took the 5% loss at, I was all in at one candle at 361.5 and exited at 333.7. So took a nice loss there, all within 1 minute. And then I repurchased it. Yeah, that was right here. Okay. And then boom, it broke through. It broke through at right here at 649, and I repurchased it when it held in this candle, and then I sold it in this rip right here, and it shot up to 425. So when I hit the button at 425, I was actually up a really great percentage. Let me see. I'll tell you exactly what the percentage was. I was actually up about 9% right there, which put me at a great profit, which would have had me finish roughly with about an actual 4% gain on the day. Let me see. So 56.4 compared to 56.4 minus 3.337 times 600. Oh, I'm sorry. Times that by 120. Okay, 36. Which would have left me at a 4% gain for the day for my position size. And when I hit the sell the market, I just so happened to catch it in the drop. So it executed me at 406.5 instead of in the 420s, which if it would have executed me in the 420s like I was trying to get out at, I would have had a 4% profit on the day. Again, that's a 9 right here. From the low 370s to 420s, that's a 9% move in that candle. And that's exactly what I was talking about, the type of volatility that I like to look for. And now this play is dying out. It was halted again. It died out in the 6s and halted back in the 430s due to volatility. The one rule I did break was I was down over 2%, but like I said, it wasn't that I was down over 2% because I was wrong about my thesis on this stock. It was that I was down a big percentage because I told you, like, I just happen to flip screens, and sometimes these things move so fast. When I see it breaking here, so this candle opens here, right here at the top of this square mark, and then so it was a green candle as it's cracking, and so I was like, okay, it already had this red candle pullback in between, so I was anticipating it breaking, which it did, and but then it just happened to tank on me super fast, and that put me down. What was it? 36. Let's see. Divide that by 600. Yeah, it had me down 5%, about 5.5% on this position size. So, man, I was instantly like, whoo, man, I had to get the hell out of there. Which on the ultimate, on the $1,000 position size, it was about 3% down. But I have to put that in the perspective of when I'm trading as well. I've noticed when I'm trading less than 1,000, I always have I always still have that 1,000 mark in my mind but I have to collect the correct data for per trade, because it's all about per trade. It's not off the 1,000. It's about per trade. What kind of move can I collect per trade? So I winded up taking a minus 5% on that particular trade, but knowing that my thesis was correct. Yeah, so 5. Let's see. yeah, just knowing that my thesis was correct on there. That's crazy. Yeah, so I had took a 27.8. I took a 27.8 cent loss on the first one, and then on the second trade, I took a 28.5 cent win. So just a little under 1%, or I'm sorry, just a little under 1 cent more, or a little over 1 cent more on my win. Um, took a minus 5% loss, a 5.5% loss, and then took a plus 5.7% gain, which left me with break even on the day. You know, and other than deviating from the plan of just cutting, being done for the day after I'm down 2%. I knew just watching this, the heavy volatility, the heaviness of the time and sales, the heaviness of the level 2, and as you can see, beautiful straight runner. I wish I would have caught it at the multi-day breakout level. Completely blew past it before I could even notice. But the strength in this damn thing, made me get in. And I could have overall been profitable because, like I said, I was up 9%. So that would have left me a 4% gain. But just the way it executed me when I hit sell the market, it just so happened to execute me at a little under 6%. So, left me with basically break even today. So MDRR, these are the types of things that I look for. Maybe get a little bit better at capturing the move when they are so volatile. Let it pull back. Buying in this candle was a pretty good execution because, see, when this one broke, it just instantly dropped. Barely broke, dropped. This one broke cleanly, pushed through, and stayed above it. Pushed through, stayed above it. Barely tiny drop right here, but ran, and I got out in this candle when it broke here. I could have been a little more patient, but I stuck with my plan. I was up over 4% on that one. Actually, I was up, like I said, I was up about 9% on it because of how fast they moved. And unfortunately, it just didn't execute my trade at the high of that candle. It executed my trade at the low of that candle. So, break even day on MDRR met my criteria for market cap, met my criteria for float, met my criteria as far as a pre-market breakout. I purchased it at the intraday high breakout. And these seem to continue to be my strength in the market. And like I said, for me to even have a really bad execution for my first trade, I still wind up on the day break even. No trying to buy it a third time. And I was very tempted, but that's not part of my rules. It's the discipline to stick to my rules of only executing 2 trades per day. And I happened to, execute that beautifully, which I'm glad I did it in this account because I almost put up my other account. But my other account only has 1 trade left. That one is still right there on that 1,000. But I might have been shaken out when this happened, and then I would have just took another loss on that account instead of this one. Basically, just broke even on the day. It said I'm green 74 cents, but that's a break even trade. So, it's the constant of getting used to this. And only buying intraday breakouts and only buying pre-market high breakouts and sticking to no more than 2 trades per day. And the key too is to try to stay with just focused on one particular trade. But like I said, usually from what I've been seeing, when you see pre-market like this, it has its run from 220 all the way to 309 and then just fades out. Normally they don't really do nothing, but now that I'm seeing that and it had a huge push here, like I noticed this huge push, but I thought that would have been the end of it. And then it just keeps going. And and then and then it got halted and then it got smacked. And I mean, does it have the potential to curl back up? It sure does. Does it have the potential to break this 613 and keep running? Of course it does. But it also has the potential to just drop back down into the twos. So, break even trade for the day. I'm okay with that. Again, 5.7 million market cap, 3.2 million float. Shares rotated tremendously. In this one candle is damn near the float right here. In this candle I entered. In this candle. In these two candles, it damn near doubled the float alone. It was up, probably rotated over 10 times the float, more like 13 times the float when I entered. So a huge float rotation, heavy, heavy, heavy. The news on here. Diversify RET share that. I mean, the original news on here holds pattern pre-bail amid stimulus uncertainty. Something about the stimulus check. That was the catalyst. That boosted it. I gotta start getting into the SEC filings again, and understanding those. I believe I still have that Michael Good DVD with about SEC filings. I'm gonna look to see if I still have it, because that's one thing. I'm mostly technical, but I think I do need to start digging more into the SEC filings and understanding the real catalyst that causes these huge moves. Because it did pop after hours over here, as you can see. That's when the spike began, from $1 up to $3, so a 200% move after hours. And then retested that high and then completely just squeezed straight through it. So yeah, man, MDRR. I did happen to take a minus 5.5% loss and then regain that with the plus 5.7 gain. But I tried to exit it at a 9% gain. It just didn't work out and executed me at the lower end of the candle by hitting the sell the market. And that's what the sell the market could do, because if it kept pushing and had a huge push, then it would have executed me even higher, maybe at a 10 to 11, 12% gain, because it dropped 20 cents really fast. And that 20 cents was, what I needed to have that extra 2% that would have put me, or I'm sorry, that would have been an extra 4. That 20 cents was an extra 4% that it just took away from me when I hit sell the market. But again, I collected my 5%, a minus 2 plus 4 is what I'm looking for. Just this one candle happened to drop so fast because it's so volatile that it did wind up taking me down minus 5.5%. And then when it curled back up and I seen the strength in the clear pop in this candle, that's when I knew, okay, yes, I need to buy this because it has the potential to run. And then exited in this candle when it broke its high here, and had a great shot. And I tried to sell it in the strength because that's what you should do. Sell it in the strength and not weakness. But like I said, sell the market executed me at 406.5 instead of in the 420s. So MDRR, basically a break-even day. Stuck to all my rules but the first one. If I'm down minus 2% or more, just close my laptop and leave the market. But again, it was just a bad execution on my part. It wasn't that I was wrong about the thesis, because normally when I'm down 2% or more, it's because I was just wrong about the thesis of what was going to happen. But in this case, it just so happened to be a bad execution on the wrong candle. I thought I was seeing strength for it to do one of these, which I expected it to do here, to have a nice pop, because if it would have had the nice pop and popped up to the 4 here and then pulled back, I would have been okay with my 361.5 execution, because I would have already been up. I would already been up for what was that, 40 cents? So 40 cents on 100, so that would have been up about 8% in one candle, and I would have took that gain instantly. I just misjudged this one candle, and it tanked on me more than 5% instantly, because it could go either way. And then I gained it all back here, which was the plan. I can't, again, I can't allow these to influence me to, try to capture more when I'm already up more. Like I said, in this candle, I was up 9.4%. And I tried to capture that 9.4% because it happened so fast. It just executed me at a plus 5.7%. So minus 5.5% plus 5.7% on the day. Yeah, man, it's just a bad execution. Just a bad execution. And that's all. Bad execution on the first one. So in a way, I'm glad I stayed in it, because again, it wasn't, my thesis wasn't wrong, which is why I took an exit, or which is why I took a loss. It was just a bad execution on my part, because I instantly switched, switched, and then, oh, look, this did exactly what I wanted. And now this now broke pre-market high here. So it's showing me that the market can heat back up, man. And that is a nice 539. So 30-cent move. So that would have been a nice 5% gain as well. But the other one shows a lot more strength. And this would have been a great, intraday break of the high here. But this is more of a morning spike reversal to me, which I'm trying to avoid those morning spike reversals. Because it just has not been working in my favor. But anyway, yeah, so I was watching this instead, and then I noticed over here that this was up over 200%. Ooh, instantly switch. And I'm seeing it already. I'm already seeing it right here. Boop, 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 boop. And then so when it broke here, I just clicked the buy instantly without having too much patience, when I should have just maintained my patience. Because look at this nice squeeze and run. Even if I would have missed this initial move, or if I would have just been patient, I would have probably bought it here, and then I would have just collected my 5%, and then I would have been up 5% on the day and sold it here. And then if it would have just rebroke again, and I could have used my second one and purchased it again and sold it probably for another 5% and finished with 10% on the day, But yeah, so stuck to pretty much all the rules except for one. Broke the one rule of if I was down minus 2% or more on my first trade, just to leave the market. But, I think in an instance like this, when it was just a bad execution on my part here, but stayed within the trend of, what I was anticipating the move to happen, because that's what it looked like. I think that's okay, because it happens so fast and it's so volatile, that, and again, typically, like on PPSI, what bit me in the ass was when I tried to catch the break and then it dropped. I sold it and took a loss, and then when it dropped more, I tried to dip buy it instead of wait to see if it had the strength to retest and break again. And that's where I think I succeeded in here was I was looking to buy the intraday break here, and it did slightly break it in this candle, but then just completely dipped on me, and then it showed strength by re-breaking it and just busting straight through. Which gave me the confidence to purchase in this green candle, because now it's holding the strength, and that's exactly what it did. And, collected a plus 5.7. So minus 5.5 off a horrible execution, and then plus 5.7 by off the proper execution of waiting for the strength of the intraday breakout to happen. So overall, a break-even day. Still have a trade in this account. Still have a trade in my other account. And today is Wednesday, October 14th, 2020. So yeah, man, walking away break even with 74 cents in my pocket when I could have been profitable 4 or 5% on the day. But again, lesson learned, just to have patience when they're moving fast. If I'm seeing a red candle, just wait for the strength. If it doesn't show strength, like it did here when it broke, it showed the strength, held over, and then held over in this candle, which is where I purchased, and then it stayed consolidated for 3 candles before it popped. Which is what happened here, you know, just it hit the high, and this is straight squeeze, man. This is straight squeeze. Would have been beautiful if I'd have been able to catch the pre-market breakout, because I would have profited tremendously. But, you know, it is what it is, man. Does this thing have the potential to keep squeezing? Of course. But it's looking like it's done for the day. And I'm done for the day. So, MDRR, market cap, 5.7 million. Float, 3.2 million. Rotated, more than 10 times the float. Straight squeeze. Pre-market break, yes. Intraday break, yes. And now it just got halted. But that's exactly the type of things I want, man. That's my range, and it's looking like these low flow, small cap stocks are heating back up, and as long as I stay within my range, I should be doing just fine. I went through all my data yesterday, and I calculated that even now with all the trades that I've executed, when I stick to the range of the -2 + 4, as of right now, because of PPI, because I took so many losses in one day, took 6 losses in a day, that dropped my winning percentage from 50% to about 38% win rate. But overall, I'm only down about -2%. And so then I recalculated through my data and said, okay, well, what happened if I would have just took 2 trades per day? Because there's been multiple times that I've taken more than 2 trades per day. And if I recalculated that and I just took 2 trades per day from the readjustment of 9/10/2020, you know, where would I be at? And I would roughly be around the same win rate, because doing that, it took away, not only did it take away some of my losses, but it also took away some of my gains. But overall, I would have been up about 3%. So it's all a matter of sticking within that range, because like I said today, boom, that was a great 9% pop. And, you know, if it had just executed me correctly, I would have got 9%. But a plus 5.7% is still a very good collection of what I'm trying to capture. And then this was just completely a bad execution. Next time, again, wait for the dip, wait for the curl. But it just had the potential to pop. And I jumped in a little quick because it was moving really fast. And when I switched over, I was just seeing it move fast. You know, it showed me that it had a bunch of buyers in the market, and there's a lot of people trying to pile on right here. And so that's why I try to pile on, and it wind up biting me in the ass for not having the patience to wait to see what it could do. Because I could have easily, even if I would have missed the break here, I could have got the break here, and I would have been perfectly fine with a profit there. Okay? So MDRR finishing today, basically break even. 2 trades executed. So now I'm done for the day. Discipline to 2 trades. I would like to stick to a -2 and just leave the market. But I want to, and that's the whole point of this game, man. It's a constant readjustment of understanding. So it's like, I want to get out if it's just a bad trade in general, as if, meaning that if it just didn't meet my criteria or is losing strength. Obviously, this was not losing strength. Look at all this volume. It's now losing strength. Look at the volume now after the halt. After the halt here, now the volume's all faded off. But this is showing nothing but great strength. So, you know, with the volume and the intraday breaks, That was great strength it was showing. Okay, so when it was showing strength, I just so happened to execute it wrong in the volatility that's going on in this particular trade. So I just so happened to have a bad execution, which left me even on the day, when if I'd have just been patient, I'd have been up 5%, 5.7% on the day with the trade still left, and I might have just walked away, with that. So, again, I want to be out if I'm down minus 2% or more on the day. I want to be out if it's just not in my favor of what I'm thinking the stock is going to do. So if it's not in my favor, that's when I want to walk away, because obviously I'm doing something wrong. That if I'm thinking it's going to break like I did here, and it did, but if it's the slowdown in volume or something where it's just looking wrong and it winds up tanking, then yes, I want to be out on the day. Meaning I don't want to go, okay, this stock is done now, like it happened here. So, now it's done. So that's what I mean. Like if this red candle happened to be this one and it just tanked out and done, then I don't want to go look for another stock. I want to be done for the day. But if it's just a bad execution on my part and then it reverses and does exactly what I was thinking it was going to do, then that's okay to hop back in if it's a clean break of the intraday high or a pre-market breakout. If it's a clean break like it did when I purchased in this candle. So I had the patience after this one broke, okay, just tanked. I bought it in the break of this candle and then it tanked on me. So bad execution. So that solidified in my mind, okay, let me see the strength. So when it broke here and held here, then I purchased in the next candle. So, if this would have broke, if I'd have just had the patience, I would have watched the dip, then I would have watched it go green, then I would have watched it pumping in the air, which would have been my entry. If I'd have just had the patience to wait a couple more minutes. But again, the things are moved so fast that I just got antsy and I got jumpy and I executed it really fast, and it winded up biting me in the ass for doing that. So again, wait for the break. And I say this all the time. Just wait for the dip of the break. Just wait. Once it breaks through, wait for the dip. But I was seeing straight squeeze that I got a little impatient. Fear of missing the move crept in. So that's why I had a bad execution here. But luckily my thesis was correct, and I happened to collect all that back in the next trade and exited with the 5.7% gain. So minus 5.5, horrible execution, and then the proper execution on the second one with the plus 5.7%. With the potential to gain a 9.4 in the candle I exited, which is where I was trying to exit, because I seen right here I was up over 8% on my open right here. I was up over 8%, which had put me right here up over 4%, and that's when I hit the candle, or that's when I hit my sell the market order, and then it just so happened to catch me on the back end when it had a pullback. And so, it is what it is. It's still a great gain. A plus 5.7% gain is still a great gain. So that was a great trade. First one, shitty execution. Tried to rush it for fear of missing the move when I should have just been patient in this candle. Look, all I needed was 1, 2, 3 minutes. Patience for 3 minutes. That's the difference with 3 minutes. 3 minutes left me break even, when I could have just waited for here and I'd have been up 5.7% instead of break even on the day. All right, so 3 minutes. 3 minutes separated me from being plus 5.7 instead of break even. So, patience, man. Just patience. Let it pull back. Obviously, it already showed a sign of pulling back with red here. So I should have just let it. So that's a great lesson for the next time I see this kind of volatility and something like this happening. If it happens tomorrow or whenever I see it happen again, to allow it to pull back first and then go ahead and try to hop in it once it re-breaks the intraday high. Okay? Okay. So MDRR, break even on the day, minus 5.5, plus 5.7. Horrible execution with the first one, and a great execution with the second one, which led me to break even on the day. All right, man. Till next time. That's it for today. It's a great lesson learned. Again, man, it's a great lesson learned, man, that I have to continue to re-solidify that in my brain of just be patient. Let it break the intraday. Let it break the pre-market high. Let it break the intraday high. And just wait patiently for it to pull back a little bit and then purchase. But if it just shows straight strength and you see green and then the second candle goes green, that's a good sign to purchase it at the break. But if it goes green, wait to see if you see red, then buy it when you see in the reverse of the red. All right? All right.